Hello traders, Cousin Vinny coming to you from theclosingprint.com on November the 8th, 2015. In this video we're going to cover the indices which all closed positive on the week. These were weekly performance numbers. Tick and Tick-Q continue to move higher. NYSE and NASI are both moving positive. Breadth, there were no MADs or MDDs. The New York Stock Exchange advanced decline is trending higher, though it's been lower the past 2 or 3 days. CPC, no signal for equities. VIX is near the 15 level at 14.33. Currencies, US dollar surged on payroll numbers. Its STO is in the red zone. It's strengthening versus the yen. We pointed out the range that both were in the last couple of months, and both broke out this week. The yen dropped lower to 81.19. Yields are higher, TLT is lower. We'll look at those charts. Junk is lower, and the UST SPX bond stock ratio is bullish equities, so we need to keep an eye on that. Rates, December hike increasing in likelihood plus 70%, and we want to check out banks in this type of environment, so keep an eye on XLF. Commodities, crude oil, gold, copper, all three are lower due to the US dollar. Setups, we'll look at IBD50, the 10E STO MACD setup, high type flag scan, and some observations we had early in the day when I was testing a live broadcast via YouTube. Here is the S&P 500 weekly chart. We've enabled Elder Impulse. The green background is the US dollar. We can see that's moving higher with prices. We have the top back in early summer, 2134.72, that we're quickly coming up to test, 213 on the SPY. But the thing I want to point out here is the bond stock ratio, the ratio of the 10-year to the S&P 500. This is a 65 period moving average on a weekly basis. When we see inflection points, this is what keys us into changes in direction with equities versus bonds. Currently we are seeing a move lower on the signal line, which is telling us equities are outperforming bonds, which makes sense. If we're going to be in a rate hike environment, more than likely bonds will continue to deteriorate. So we're looking at the 65 MA, that's starting to turn down. The ratio moved down through the 65 period moving average. And note, previously when the 65 period moving average moved lower, that was a bullish time period for equities. So just keep that in mind going into the next couple of weeks, that this could continue and that we might see higher prices on equities. So we could continue to move higher this week. Just keep that in mind. If you're bullish, if you're bearish, seems like we're not too far away from a respite, if we got one at all. Here is the S&P 1500, which is comprised of the small cap 600, which are outperforming currently, the S&P mid-cap 400, and the S&P 500. The composite with new highs minus new lows percent is what you're looking at here. If you're bullish, you want to see this trend continuing. If you're bearish, you want to see this turn over. Currently the histogram of this ratio, which is another way of measuring it, is positive and moving higher. It's above the 5% level, so that's positive, and we're flagging out here. Now we're going to watch these wicks here, where buyers have stepped in inside of this larger candle that we put in on Monday. Okay, so keep an eye out on this daily chart. We'll post this from time to time, and if you're bullish, you want to just continue to see this moving higher. If you're bearish, obviously you want to see this low being taken out here at 480, which would negate this move higher and possibly a test of this 20 period moving average midline of the Bollinger Bands. Here is the New York Stock Exchange composite of more than 2,000 stocks. We note that the 10 EMA is just barely holding on to price there. We had this breakout of this trend line that went back to the June highs. We could extend this out further possibly, But these highs seem to indicate a nice pivot area. We came down and tested the extension. If you check that out, we have this area above where volume by price starts to lend more resistance, and we have the 200 period moving average overhead on this daily chart. Now we could certainly bounce off of this area on Monday and move higher. We'll be watching for that, but Stowe is moving lower on higher average volume. High-low is continuing to move sideways. Generally you want to see this above 50, which indicates that new highs are expanding, and in general outnumber new lows when we're above 50. So you want to see this turn back up if you're bullish, and you want to see it turn down if you're bearish. Here is the S&P 600 small cap index. Note this is outperforming the Russell 2000 currently, 600 versus 200 stocks. We're in the red zone. MACD is firmly positive and above the zero line, above its signal line, and continuing to move higher. This is why we chose to move money out of S&P long funds, growth funds, and into small caps, which generally outperform in the months of November and December. Here is one of the funds that we're investing in, small cap. This is the American Beacon Small Cap Fund, AVFIX. You can see quite a surge this week, up 3% over the week prior. We started in this area right here. We added last week. Prices are moving to the upside very quickly. Stowe is overbought. However, MACD is showing that momentum could continue, and if we get back above zero, that could show signs that we may be testing this high over the next couple of months. And here is the other fund that we're invested in, the Hartford Small Cap Fund Class Y shares, HSCYX. Note this spread triple bottom. We are bouncing off of that level, headed for the 20 period moving average here, the descending red line. MACD is turning, note where histogram is, and Stowe continues to move higher on this weekly chart. So the trend looks good for us. We bought into this area right in here, and then we added last week. We're up 2.82% on this particular small cap fund. And here is the Russell 2000, which we pointed out last week in the video on Sunday. We were watching the wicks here, the buying that occurred right along this level. Well, this week we got confirmation. We broke above the brown line, which is the 65 period EMA. Okay, so this looks good. We're up 3.26% on the Russell 2000 last week. Look for some rejection here, possibly at the 50 period moving average, the green line. If we break through that, then we have these highs that we're probably going to test in the weeks ahead. Remember, small caps tend to do better in the months of November and December. Some things to watch for with your indicators this week. Keep an eye on NAMO. Breadth on the NASDAQ and technology in general is tending to outperform. So we're going to keep an eye on that. With the NASI, summation index continues to move higher. We're above those levels that we broke above back in July. With regard to the NIMO, the McClellan oscillator for the New York Stock Exchange, note the moving average is turned over. We're positive for the month of October, first week of November. We're starting to test those levels. Note that the summation index is pointing to a possible cross. That could change if the fate of banks continue to look better on XLF with a looming rate hike for December. Here's a chart of VIX getting very close to an inflection zone where we might see a top. That might occur along this triple top area that we saw back in May, June, and July. If we test those levels at 2113, that would be very interesting to say the least. We could see a further drop on VIX as complacency continues to set in. Now, if we start to see a drop this week from these 4 days down off the highs, that could inflect higher and show a little bit of fear going into mid-November. You can clearly see that with the VIX VXV 1 month to 3 month ratio, where we're down in the red zone, meandering around 0.80, which has been a top in the past. So it's very possible this could continue to move lower this week, and that we've seen a period of inflection right here after this huge move off the late September lows. We've finally hit an area where we might see some bearish action. We won't know until Monday, obviously. With the rate hike looming, it's very possible that we could see XLF start to pick up the baton and start the relay into the last part of the year and continue to see the indices move higher up to this 2113 level. Tick cumulative continues to look very bullish for both the New York Stock Exchange and the comp. Both of these look very similar. Note the distance between the 10-period EMA, the blue line, and the signal line continues to move higher. This is a reflection of sentiment by institutions who've been buying all this time as prices continue to move higher. They made a lot of profits in here. So it wouldn't be unusual to see a little bit of a move back down to this area down below. So you have to keep that in mind. If you're bullish, you want to see this continue to move higher, and sentiment tick continue to close above the zero line. And also, if you're bearish, you want to see this turn over and tick starting to register below the zero line most of the closes during the day. That will make this cumulative index move up or down. CPC, the put-call ratio, is right in the white zone, so we're not getting much of a signal here on the put-call. And of course, the New York Stock Exchange new highs minus new lows, we see a red bar on Friday. So that's something unusual after seeing all of this positive action over the last few weeks since late September. So here is the US dollar, which has been doing quite well. Surged on Friday, broke above this range. We broke higher on positive jobs data. I'm still reluctant to believe what I'm hearing, but that's what the numbers say out of the Fed. So got to watch it. Copoc curve starting to show that it may be changing direction. Stow is overbought and MACD is positive. So the dollar looks pretty strong. I would like to see a little bit of a change in direction. Come back down to the 10-period EMA. That would give us a little bit of a respite on the equities. With currencies higher, in particular the US dollar, you would expect to see commodities moving lower, which is what we have. Here's copper with a triple bottom. Some intense volume last week. Still was in the green zone and ready to inflect higher, possibly, which would line up nicely with the US dollar pulling back a little bit. MACD's down below zero, and we'd like to see that turn back up this week. Gold is seeing similar action. Note the volume. We're in the green zone. We could turn back up. We're at a bounce area, possibly, and MACD is below the zero line. I want to see that turn back up. Crude oil continues this move higher in this ascending wedge pattern. Still putting in higher lows, testing this level here that we saw back in September, however. A breakdown below this would spell trouble for light sweet crude and possibly a surge higher in US dollar. Here is TLT daily chart. Note the 10 EMA is dropping down below the 50. Prices are back down to the area that we saw back in late September and could move lower. MACD is crossing down below the zero line, and Stow is in the green zone. Here's the weekly chart, which shows very clearly the weakness in bonds, dropping below this level back in late September. Looks like we could test this lower Bollinger Band and the lower levels here on this volume by price support level. If rates do get hiked in December, we could see further deterioration in bonds and yields continue to move higher. Looking at junk bonds, we can see a similar fate. The 10 EMA is turning over, should be dropping below the 50-period moving average. Note the Bollinger Bands are tight, so we could see this expand further to the downside and junk bonds get more of a hit to the downside. Stow's moving lower, MACD is rolling over. Volume's picking up, and pretty soon we could see a really big drop on this reverse Kirby on junk bonds. Here are our sectors in a candle glance format. We're watching Chaikin money flow. In this case, prices above the 20-period moving average in most cases, except for XLP and XLU, the defensive sectors, but everything else looks pretty bullish. IYR is down below the 20-period moving average. What we're most interested in is financials. Let me change this duration so that I can get rid of that crazy candle back in August. We can see price action continues to hug the 10-period EMA and the upper Bollinger Bands. Had a gap up on Friday, and for the most part, price action is just staying between the 10 EMA and the 50-period. Note the volume. MACDs continue to move higher, and stochastic is near the embedded zone. This could stay embedded and fool a lot of the bears going into the next few weeks. For you guys that bought the book, I uploaded a new video to the site over the weekend, the core strategy, which highlights our core thinking process. And we focus on finding proper setups on the candidates predominantly found in the pages of the Investor's Business Daily. This is, of course, another in the series reflecting on the continued theme of a classroom on video and constructed to mirror our one-on-one classes with the singular purpose of improving your probability of success. So check that out. The IBD50, this is the new list with percent sorted by percent change. A number of the stocks that we pointed out in the core strategy video are doing quite well this week. Internet, NTES was one of the names that we looked at, moving higher up to these previous highs. MACD's positive, staying above its signal line, and STO is turning higher as well. We looked at a few other names. Given the strength in XLF, we're watching Ozark, which gapped higher on Friday. Watch for a gap and go on this name. Remember the gap and go, we want to hold this low here on Monday, Tuesday. If that happens, it starts to drift higher. Look for higher prices with MACD positive and STO turning back up. Western Alliance Bancorp was another name that did quite well last week. Gap and go. Watch for the 3750 level to hold. I wouldn't chase this. Wait for it to come back possibly and test this low. If it holds above this level and starts to move higher, we would keep an eye on this one for a potential trade going into the month of November. Note MACD is very positive, nice volume, and STO's turning up. Manhattan Associates with a nice look to it. Mikey mentioned it over the weekend. Nice flag into the 10-period EMA, broke out on Friday. Note the volume, MACD's positive, and STO's turning back up. Nice 10E STO MACD setup. NOAA Holdings, also a name in the finance sector. Financial advisors continuing to move higher. 10 EMA, note the Bollinger Bands are expanding. We have not much of overhead supply. We have these levels up here to test. Bollinger Bands are expanding, MACD's moving higher, increased volume, and STO's near the 80 mark. Avago in the semiconductor industry group, keep an eye on this trend line here. It's breaking above this level. This could signal a move higher on ABGO. Increased volume, MACD's positive, above the zero line, above its signal line, and STO is moving higher. IDTI, also a name in the semiconductor index. Note the pennant pattern and a break higher on increased volume. Very suspicious here. I would suspect this is institutions buying on this nice cup pattern, very brief handle consolidation pattern, and a break higher on a relatively inexpensive stock at $26.39 to close on Friday. Monolithic Power Supply Systems, MPWR, is also a name in this group. Note the nice little consolidation pattern against the 10 EMA. Nice base here, broke out in late September, continues to move higher. Gap and go here that held. Price is moving higher on increased volume. Fairly thinly traded stock. We have MACD moving higher above the zero line and STO's in the red zone. Watch for MPWR. Maybe we get a better entry on this one. If it pulls back a little bit into Friday's action, we could see a further flag and then a move higher. Google continues to move higher after this gap and go in late October. We held these levels and then prices continued to move higher. NVIDIA is another name that popped up over the weekend. We took a look at FinViz, which if you're looking for potential gap and go candidates, just go to Screener, select Technical, Gap. I usually use about 5%. Go to your descriptive, select average volume. I like around 1 million shares. Then go to charts, and that'll give you what had nice gaps last week. And look through these lists. This list had a nice gap on Builder's First Source, nice gap on Data, Tableau Software. I think Mikey mentioned that this weekend. This is where we saw NVIDIA, LXRX Pharmaceuticals also looking interesting, gap and go. Monster, this was a group on the industry list on IBD that was moving higher in the rankings from 6 weeks ago. I believe it was either number 1 or number 2. This week, NVIDIA, here's your gap and go on NVIDIA. QRVO Semiconductor, another semiconductor name. Keep an eye on these names because this could be a potential gap and go nice long here if that low holds going into this week. That's going to do it for me for the night. This is Cousin Vinny coming to you from theclosingprint.com. Be sure to check out the blog if you're not a subscriber. Input your email here, click submit, and you can get these watch lists posted every morning and thoughts for the day. And if you're a new trader looking for a way to enhance your trading abilities without making the mistake that many of us make as new traders, losing a lot of money, check out my book. It's Inexpensive Insurance and will teach you the right way to trade from the very start. I hope this helps. Take care, and we'll talk to you on the stream on Monday.